basic fields of accounting: financial accounting, managerial accounting, and tax accounting. I like to say that financial accounting answers the question, how did you do? Managerial accounting answers the question, how are we doing? And tax accounting answers the question, what is our fair share of taxes? Financial accounting answers the question, how did you do? So we tell people on the outside how we did, what happened to us previously, so they can make good decisions about what's going to happen in the future. And we show them our 4 financial statements: the income statement, the statement of retained earnings, the balance sheet, and the statement of cash flows, that are all prepared in accordance with generally accepted accounting principles. And it's based on historical information, what happened to us before, so people can predict about what's going to happen to us in the future. Whereas managerial accounting, primarily we're answering the question, how are we doing? So we're telling our managers how we're doing so they can plan, direct, and control the business. Our reports aren't necessarily the financial statements that we prepared in financial accounting, but other reports like cost variance reports, like static budgets, like flexible budgets. And we'll prepare them as needed by management. There are no generally accepted accounting principles that necessarily apply to the reports that we prepare. But we're going to have to use basically the same information base that we use to prepare our financial statements. So again, financial accounting, how did you do? Managerial accounting answers the question, how are we doing? As management accountants, we're giving feedback to management so they can plan, direct, and control. For example, we might have 3 different products that we can make, and we're limited on, let's say, direct labor hours. Management might ask us, which one should we emphasize? And what we'll do is we'll look at the limiting resource, direct labor hours, and figure out which product has the highest contribution margin, which product makes the most per direct labor hour. Management is also responsible for directing, for running the day-to-day business operations. We might have in place a standard costing system. So we can say to management, this month, we're in the middle of the month, but we can tell you right now that we're spending more on direct materials than we plan to. So management can investigate that right away and figure out whether we're purchasing at too high a price or we're purchasing at too low a price, which is leading to a lot of waste. But we can help them by telling them that we have an unfavorable direct materials variance in the middle of the month. Controlling means evaluating the results of the business operation against the plan that we made previously. So we might have told them that they were supposed to, of the 3 products, emphasize product 3, and we had a budget for how many sales we would have and what our profit was going to be from that product number 3. Well, at the end of the month, we can go back and help them compare actual results to budgeted results so they can make good decisions going forward. What kind of skills does a certified management accountant have? They have analytical skills. They can look at a report and determine whether we're under budget or over budget and why. They need Excel skills. If we're trying to break a cost down into its fixed component and its variable component, we need to be able to use Excel to figure out what the regression line is that defines that cost behavior. They need good written and verbal communication. So please, when we're sending out our reports, check for typos. Be very clear about what we're trying to communicate to management. And we still need to know debits and credits. Just because we're no longer in financial accounting doesn't mean we no longer have to worry about journal entries and debits and credits. It's still part of our life. We've got to understand whatever business we're in, and we have to have the ability to work on a team. And this is the 21st century, so we've got to respect the triple bottom line. People, planet, and profits. We treat our employees fairly and equitably as we do other people that we run into in our business. We treat our planet right. We use recycled materials whenever we can. And we're mindful of our profits. If our revenues don't exceed our expenses, we can't stay in business very long, so we won't be around to respect the planet or treat people with respect. So the triple bottom line, people, planet, and profit, is very much part of our lives as certified management accountants. And just like any other professional, we have to behave in an ethical fashion. We have to be competent, we have to maintain confidentiality, we have to perform our duties with credibility, and we have to uphold our integrity. And if you think that this is just some horror story that shows up in chapter 1 of your managerial accounting book. It is not. At some point in your life, you will face an ethical crisis, and you'll have to decide what the next right thing is. All right, I hope that helps.